Okay, so scalping, this is a multi-part video series, and now we're looking at our trade target ideas. We did look at stop losses earlier. If you've just come here, go and check out the videos that have led up to this. But if you're just here, you just want to check this out, then that's fine as well. So scalping, we're talking about short time frame, short targets in, out, grabbing that pulse coming out again, not looking to sit through any pullbacks, not looking to sit through any congestion. We're in, we're right, we're out, we're in, we're right, we're wrong, we're out. Whichever way, we're trying to predict that short-term movement. That's what scalping is about. Okay, so trade target ideas. The astute of you are going to say, hang on a second, this is exactly the same as the previous slide, and you are quite right. Because when we're coming out of a trade, there's no difference to us exiting a trade when it's gone our way or when it's gone against us. When we're scalping specifically, it's very, very equal. We're looking for a high hit rate as opposed to a massive risk reward ratio, potentially, if we're purely scalping. And so candle length makes perfect sense. Now, with the stop loss, our candle length is okay. Let's take the 1 minute candle over a 20-minute period and say, what's the biggest one we've had? Oh, it's 12 pips, it's 12 ticks. That's my stop. We don't do that. With our target, we are looking for the likely move. So we're going to say, okay, what's the average range of a candle? You can use an average true range indicator here over a 20 period. So you've got 20 minutes. What's the average range over the 20 minutes? The last date number you've got is going to be that, and it will be, let's say, 8 ticks or something. So that's going to be your trade target. So the beauty of doing this, guys, it's very simple using that ATR function, is it keeps you in line with the current volatility. It keeps you in line with the current high-low move. It keeps you focused and it keeps you in tune, because too many times, because scalping, guys, is such a thin line between being profitable and being losing, or losing, should I say, because one tick, trying to look for one tick too much and it comes back, is the difference between getting it out and getting it wrong. So you need to align yourself with conditions as much as possible, which is why this works so well, because it is constantly aligning you with conditions. And then when the ATR falls too low, you're like, well, it's too low. It's 6 ticks, it's 5 ticks. It's not worth me trading. I've got a spread of 0.8 or whatever it is. Then you can come out of it, or come out of it as in not trade it. So candle length, use that ATR over a 20 period and say, right, what's the average length? That's what my target is going to be. Number 2, indicator signal. This could be something like we just squeeze into an overbought territory to exit that long. Don't forget there's a difference between going into overbought and coming off an overbought, or going into oversold, coming off oversold. So that could be your target. It could be something like tagging an upper or lower Bollinger Band to exit your trade. Very, very good Bollinger Bands for scalping, because they kind of keep that range, but when you get those extreme stretches, that's when you get a tag of the upper or lower band. So they're worth looking at. Fixed ticks or pips, again, big fan of this because it keeps you in line with what's going on. Now it's very, very similar to the candle length, but the candle length is a little bit more dynamic based on the intraday movement. So you might get 20 minutes of extreme move, which kind of stretches the target, and then you might kind of contract the move, which brings the target down. Fixed ticks or pips is kind of saying, okay, well, I'm going to keep the target at, say, let's say 11 pips target over that week, and you're constantly adjusting it maybe every week or every quarter, but it keeps you generally in line with stuff. And the good thing about that is it saves you from any decision making. You're like, listen, I know what my target is, I know what it's going to be. I don't have to think about it. And also it helps you frame the trade as well when you're placing it. So the 4th one is under support or resistance. So this is really what I consider like the alternative to what most people do. And this does work well, guys. If you've got a long, many people will take it out before it hits resistance. Personally, I like to take it out when it's broken resistance. You're like, well, what's the point in doing that? Because when you're scalping, most of the time markets will have little probes through highs and lows. If you've been trading for a while, you're going to know that's the case, guys. You've probably been stopped by them. We want to reverse our thinking and trade the other side of those stops. So as the price comes down, especially with scalping, it's slightly different with day trading because those are a bit more solid and there's a little bit of more of a consequence of it not breaking. But for scalping, we want to take that little momentum or fade that momentum. And so let's say we've got on the end of a short that's popped up to the high side. Now it's pushing down and it's breaking through a low. that's when we close it out. We don't wait until it's just before the low, we wait until it's just flushed through, because that little push, especially on some of the more volatile and extreme ones like the DAX, for example, and crude oil, which when they break, they do flurry, and yes, you get those wicks. But if you're prepared for them, if you've got orders staggered under that low or staggered above that high, then you're really capturing almost the high and low swing. And sometimes it's uncanny. You're like, wow, I just caught the high tick on that chart, or I just caught the low tick. Obviously, sometimes it's going to rip off without you, but you're there for the scalp anyway. So doing that is a good kind of tactic. All right, fifth one is short term high or low break. This is very, very similar, guys. This is okay. Now we want to be capitalizing on those little mini breaks. So support and resistance is probably the same as the short-term high or low break, but if it's a decent level, give it a little bit more room. You know, stretch that target a little bit more than you normally would. That works well. And time-based is, you've got a couple of ways of doing this. One is you say, all right, whatever happens, I'm coming out. And this is exactly the same for stop loss. So if it's been going for 6 minutes or something, you don't want it, or 20 minutes, whatever the time may be, you don't want it. But it's the same for your target as well. You know, if you haven't got that time period, it hasn't done what you wanted, then you're coming out. Or you might say, and this has worked very well under certain conditions as well, guys, I'm going to hold it for 5 minutes. That's it. If it hits my stop, I'm out. Otherwise, I'm just holding it. And that allows you to get a little bit of a stretch as well, because you're using the judgment saying, well, we're getting kind of pulses for 5 minutes before it rotates, and you're looking at your chart. And so you're using that to your advantage. You're saying, okay, well, if I have got this turning point, which because of my strategy and capitalizing on that wick and tail, I probably have, or that's what I'm hypothesizing, then why don't I use a 5-minute target on the trade and then go, okay, it's gone for 5 minutes. Now I'm coming out of it. And so doing that kind of thing keeps you in line and in tune with the market. It's a little bit different way of thinking about it, but it works really, really well. So those are 6 trade target ideas, guys, for your scalps.